Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, March 23rd, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen. This week will be remembered for quite some time. Two critical events really taking gold dramatically higher, the FOMC meeting and a looming potential that China and the U.S. will enter a trade war. Gold closing up substantially higher, up $19.90 at $1347.30. We did initiate a long position the other day, and we will cover that in detail as we pull up our technical studies. Silver up 17 cents at $16.56, and that is all in light of a weaker U.S. dollar, 89.09, losing about 37 points. The big news over the last 2 days was a tumbling Dow, which lost approximately 1,100 points in 2 days of trading, closing at 23,533, losing 424 points today and over 700 points in yesterday's trade activity. Of all of the markets that we follow, Bitcoin is actually muted, trading in essence unchanged, down a little bit, 86.45 and 86.20 in the CBOE and CME's futures exchanges. Events this week certainly have sent the market into gyrations, but before we get to gold, let's take a look at the major mover this week. Dow Jones Industrial Average closing down about 1,100 points over the last two trading days, and this week resulting in an 8 or 9% drop in overall value. This due to concerns over the escalation of tariffs and the real possibility of a trade war between the United States and China. As far as gold pricing is concerned, this week really had two major events. When on Wednesday, we had the conclusion of this month's FOMC meeting in which they announced a 0.25% rate hike as well as 3 rate hikes for 2018. The market shot up tremendously, closing up about $20. It doesn't show that on this particular chart because of where they ended the day. However, about 15 of that $20 was already factored into current pricing before the announcement was made. And actually, the differential was about $6. It was for that reason that we did not add a position on Wednesday's trading activity, because if you recall from Wednesday's and Thursday's show, I really believed we would see a small softening in which we would get a good entry price to enter a long position. That takes us to Thursday's activity, and you can see that it was fairly muted compared to what we witnessed on Wednesday as well as today. And we did, in fact, send out a special trade alert recommending the initiation of a long position. Traders, we got into our trade at $13.29. I'm very pleased with the fact that we did issue a trade alert yesterday and in fact found some sort of a window in terms of entry price, because as you can see, yesterday we did get a slight softening of the market. It allowed us to get in at $13.29, and today we had gold move up another $20, closing at $1347.30. The question now becomes, where do we think gold will rise to? Because this current rally is definitely being fueled by the prospect of a potential trade war, and it is highly unlikely that that conflict will be resolved quickly. Initially, I don't see any issues with gold taking out its current highs and this triple top at around $13.65. We're only about $20 away from there, which puts our first price target at $13.65. However, I believe that this rally could take gold prices substantially higher based upon the fundamentals behind this move, and for that, we really need to use a Fibonacci extension. And traders, I've done just that. We have created a basic Fib extension going from the lows achieved back at the end of the year at 1240 up to 1365, the first major rally of the year, and then we begin our extension at the beginning of this rally at approximately 1306. My forecast is If we have a trade war, an extended conflict between the United States and China, our first target, once we breach the triple top that exists currently at 1365, our next real level, and the level I believe we could initially see gold trade to, is 1385. That is a 0.618 extension of the last rally. However, ultimately, I believe that we could see gold pricing trade as high as $1,435 per ounce. That is a 1-to-1 relationship between the last rally and the current rally. The only caveat to that extended rally call is that I do not believe that will happen in a single spike or wave. I believe we will see peaks and valleys, and therefore we need to look very closely at certain targets and areas. Of course, the first one being 1365. Beyond that particular target, the next would be at 1385. Since we are currently in an April position, we want to inevitably switch over to a further contract, that would be June, and do that at a strategic point. Therefore, my recommendation for today is to maintain our current long position in gold and to maintain our current stop level. We will look to raise our stop at the first part of next week. And traders, as far as silver goes, as you know, over the last couple of weeks, we've pointed out the key differences between the way that gold is reacting and silver is reacting. Remember, there is a tremendously large industrial component to silver. We are still trading well below silver's 50-day moving average and 200-day moving average, and until the price point breaks above that set of averages, I am reluctant to issue a buy signal in silver. Lastly, I do want to take a look at Bitcoin and Bitcoin futures. If you recall from yesterday's show, we had identified a 3-day pattern simply called a three-river evening star. However, to actually take that call, we would need to see a confirming candle, and the criteria for a confirming candle has to be a large or at least medium-sized red candle containing a lower low and a lower high. The fact that it is red means that it closed below the open, and the fact that it would have lower highs and lower lows tells you that it is now headed in a downward trajectory. As you can see, we didn't get that today. Market closed down about $10, in essence unchanged. And when you compare it to the activity in other financial markets, such as the Dow or precious metals, if anything, Bitcoin is muted. We'll take a look at it next week, but my call currently is that we could see continued downside pricing in Bitcoin and Bitcoin futures. Traders, this week was a game changer. The possibility, the real possibility of a trade war between China and the United States has put the real potential for gold to move dramatically higher over the next couple of weeks. The key is that I don't see either of the superpowers blinking, in other words, backing off very easily, which means we could be in tune for an extended move leading into a trade war. I believe that gold has the absolute potential to go to 1400, and as you saw in our technical studies, my call right now is gold at 1434, 1435 over the next couple of months. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.